Hello guys, welcome to episode 1 in the Simple Method series. This is going to probably be a 3 or 4 part series, and you'll be able to find all of the videos uploaded all at once on my channel. Now, before we get into this first episode, I want to say, if you haven't watched the Foundation series yet, I would go and watch that because it just covers some of the core concepts that we're going to be using in here. So with that said and done, our main focus today is going to be on higher time frame direction. Okay, so this is going to be a little bit different to the intraday bias, just because we are going to be looking for mainly pro trend moves following the higher time frame. I also want to say that this is kind of a method if you are at work and you can't be spending all the time on the charts. This is a method for you because we basically set our levels on the 4 hour in the morning. We wait for them to trade into them, and then only when they trade into them we look for entry. But let's not get ahead of ourselves. So on the screen you will see a few diagrams. I've drawn these just to give a representation of what we are looking for. So we've got 4 things that we would be looking for here. We've got a bullish base, we've got a bearish base, and I just realised I've spelled that wrong, so let's just add one more L in. There we go. So we've got a bullish base, we've got a bearish base, we've got a bearish continuation and a bullish continuation. Now, you'll be looking at these thinking, well, I know these are candlesticks here, but what are these? Now, this is a line chart. I'll show you a little bit more about this when we go into the chart examples, but this sometimes allows us to see it from a simpler view. So what are we focusing on to find these levels? Okay, we are focusing on the closes. Okay, so in this example here, we'd be focusing on the close of this bearish candle. Here, we'd be focusing on the close of this bullish candle. Here, we'd be focusing on the close of this bearish candle. And here, we'd be focusing on the close of that bullish candle. Now, why am I looking at using the line chart? Because the line chart only maps out closes. So whereas on the candlestick chart we have the open, the high, the low and the close, on the line chart we can set it up to only look for closes. Now these closes will be represented by dots on the chart. Okay, the chart that I use is the lines with markers, I think it's called, and it will just give you little dots where price has closed. So in this example I would know that this is my level. In this example I'd know that this is my level. In this example I'd know that this is my level, and in this example I'd know that this is my level. Now what I will do is I will then go and label these with a B, like so, or a C for continuation. Okay, so that's how you mark them out. Now, what should we be expecting when price trades into these levels? So, say for example, price is coming back down here, okay? We want to be seeing price tapping this level, and then on the 4 hour, if it is going to give a reaction, it should not close past this level. It should give a rejection up. Okay, now if we do get that close through, okay, and I'll illustrate that by just copying one of these over. If we do get that close through, then we cannot look to go long from this anymore. Okay, now it would be the same situation over here. Okay, if we're looking to go short off of this level, we'd like to do price return to it and close below it. Okay, if we close below it, that means that price is likely reacting away from it. Now if we were to get a push up and a close through, yeah, again, just like the bullish level here, I wouldn't be too interested in taking shorts. Yeah, again, it's the same thing with this. Okay, if we come into this level here and we are bearish, we can then be looking for bearish continuations. And if we close below it, then that's usually a good sign that we are going to be reacting from it. Now, say for example, we run into a bearish continuation while we are bullish. What this would give is a pullback for us to then look for a bullish continuation. Okay, if we react from this and we have, say for example, reacted from a bullish base and we are still bullish, if we come into this bearish continuation level, give a reaction, it's usually just a pullback to then carry on going bullish. Okay, we can only reverse from bases, and continuations usually allow us to get in as price is going from one level to the other. We'll have a little bit of a look at this in some examples because I know that sounds a bit confusing. Yeah, again, if we close through this level though, I would no longer be looking at it for a level to short from. Okay, as you can see there. And finally, you've probably got the idea now, but if we were bullish, I'd be looking for price to come and reject off of here, like so. If we were to close through like this, I would no longer be interested. Now, there is another thing that we can look to use these levels from, because at the moment I've only talked to you about the standard levels, okay? So I'm just going to clear off this now. Actually, I'll just hide that. Hide. And then we've got a little bit more here. Okay. So, say for example, we are starting to come through and we are approaching this level like so, okay? Then we get a close through it. That doesn't mean that level cannot be used, okay? With these levels, I want to see a wick rejecting it from the upside and a wick rejecting it from the downside. So if we've had a close through this, we have not had a wick rejecting it at all. And then suddenly we pop back up and then give a wick rejection here. That is your first wick rejection. If we were then to come and trade back through it and give another wick rejection off of this, that's your second one, and then that level would then be dead. We would not use that anymore, okay? And it's the same for this level here, okay? So say, for example, we were looking to take shorts from it, but it closed through, and then it tapped this level, and it gave a wick rejection. We would expect price to react from this, like so, and then continue higher. Then maybe a couple of weeks later, we come back and we retest from the low, give a wick rejection. Now that one's done, okay? Now these ones here are a little bit different because it kind of depends on if we're bearish or if we're bullish. So say for example, we're bearish here, okay? We come up, we tap this here, all right? And then we give a reaction. Then all of a sudden, we tap into a bullish base. We come all the way through here. I would still like to look for a reaction off of this. Obviously, it's a bearish continuation, but we are bullish. So we would either look for price to give a reaction from here, like so, or, you know, maybe there would be a little level next to it that would just come down and react to it. You'll kind of see what this looks like when we go into the real chart examples. It's probably the only best way to explain it. But yeah, again, the same thing here. Say for example, we were bullish, we got that continuation, we tapped into a bearish base, we came through. I'd be happy to look for shorts like so. Okay, so that's pretty much everything on theory. Now let's hop on to the chart for some real life examples. So now we are on the candlestick chart. We're on British pound against the US dollar. I'm using the 4-hour chart. You can use this on the hourly and the daily. However, out of the three, I think the 4-hour operates the best. Each time I've kind of gone to use the others, I've always gravitated back to this. Now, as you can see on the charts, I have labeled them B for base and C for continuation. Now, just to show you how I would find these is I would go to the line with markers chart And as you can see, each one of these dots represents a 4-hour close at the price point. Okay. So one thing I did forget to include in the diagram is when we create this level, we do not want the following candle to tap into it. We would like to see a rounded retest. The best way to describe this is when we create that level, we then, okay, if I make this black, make this red, we then want to see a U shape retest or a N shape retest. Just a rounded retest. And essentially all this is doing is it's saying, well, we've taken liquidity from the high of this candle, or say for example, when price comes and trades into here, it would take liquidity from the low of this candle, and it's more likely to give you a stronger and quicker move away, so you can then get break even quicker and minimize risk. So from here it is very, very simple. Okay, what would I be expecting from here? So from this level here, I would be expecting price to reverse. Now, if I just go over here, and this is the beauty of this method. With a lot of strategies, we can't really use levels which are far away. However, with this, as long as it hasn't been tapped, then it's fine. So we can see this level here, if I just highlight it here with this line chart with markers, we can see that it is this closed level, and then we go to the candlestick. We have had the nice rounded retest, but each time we have come through, we haven't tapped it. Okay, you can see what I mean. So we come in, haven't tapped it here, we come through yet again. I need that rounded retest. That immediate touch is not of interest to me. And then we come all the way through here, not getting tapped, not getting tapped, not getting tapped. Absolute no man's land around here. I may have to zoom out a little bit more. Yep. Until we come to this candle, which is on Tuesday, the 27th of Jan, 2006. And we tap it, and then we give a wick rejection. So this is our first step. Now we'll talk about confirming whether we are reversing from this level or if we're going to continue from a level in the entry video. However, this is our first step, a close below this level. So from here, say for example, we have our confirmation on the lower time frame. We're not going to go into that in this video, like I said. But from here, let's imagine we've got that and we've confirmed it. So now where is our next stop? So the next stop would be the next base level. Okay, so I'm going to have a look here, and I can see that we have this high here. We also have this high here. And if you want, you can yet again do this on the line with markers chart. Okay, if I zoom in just so you can see those markers. Okay, you could possibly look here. Let's have a look. Yeah, so these would kind of be my levels. You can see that price hasn't tapped these from the downside, and it hasn't tapped them from the upside yet either. So we can definitely have a look at these levels here, like so. Bring these out. Now, because these are all base levels, if we trade into this and we give a rejection, we would expect higher prices. So I'm just going to label these for you. I think the best thing to do is label stuff as well, just so you don't get confused. Whether that's by, putting B's and C's, or maybe you want to make them different colours for you, whatever works for you. For me, I kind of use colours for different kind of lines, like 5-minute liquidity and stuff. So for this, I just kind of use labels and black lines. So none of these levels here have been touched from the downside. So when price comes into these, we can possibly look for longs. So let's fast forward price on. So you can see there, we rejected, and then on the next candle, we closed below. Okay, now another thing that we can see here is we've got this continuation level. So price is forever evolving. So say for example, this is a bullish continuation level. So if we were to come into here, I would expect price to then come up higher to then carry on going lower. Okay, why? Because our overall bearish bias hasn't changed from this base. So I'll fast forward this on for you guys, and you can see here, does this close above or close below? So this closes below, okay. Maybe you could have got a continuation from as price was trading into it, and you could have looked for price to kind of reject off of something from here. Okay, because this was bullish and we were bearish, we would have been looking for a bearish continuation anyway. So I'll just show you possibly, if we go down to the 1 hour, we could have taken a, it hadn't hit it then, so yeah, so maybe no trade then there from that point. So because this is closed through this level now, I would assume price is going to be going down to the next level, okay? And we can see if that happens. So now price is closed through this level, so I would assume we are going lower. And there you go, we tap it, and we then give a nice rejection. So for me, I would now say we are going to be going higher. Sorry about the coughs, I have got a little bit of a cold at the moment, a little bit of a winter cold. So we have this level here, this is a base level, and this is a bearish base. So if price comes into here and wicks, then I would look for shorts. We'll just neaten this up a little bit here. So price has come into this level, however, it's a close above it. So in this scenario, I would be looking for price to then most likely reach here. And there you go. Okay, so now that price has reached here, guys, where should price go? This is a base, price is rejected. We should then assume that price is now going to carry on going down lower. And where is our next level that hasn't been mitigated? Well, in this case, it's actually this level, because we still haven't had a wick rejection off of this, unless you count that, but no, that's a closure above. So we'd be looking to target this here, and then the next place, because we've closed through this, that could reverse price would be here. So we could look for a continuation from here, a pullback to then go lower. Okay, so we look for that pullback to go lower, and as you can see, price comes all the way down here, and what we want to be looking at is we want to be looking at the most recent reaction. So you can see this is the lowest point that it went to, this is what it reacted from here. Now I'm just going to quickly put on my fractals indicator, because what we can see is when price sweeps a fractal and comes into one of these levels, this is what we would class as A+ setup. This is a setup that's really going to give you a really nice trade. So in this scenario here, where would I expect price to come to? Well, we have this base level, you can see that from these dots, and I'm just going to take these fractals off now because they're a little bit annoying with this chart, but you can see here we have this base level. So price should now come and tap up into there. Okay, so it looks like price has now made another base here. And sometimes, you know, price isn't going to work all the time. Sometimes price isn't going to reach these levels. These are just kind of guidelines where price is most likely to go. So, say for example in this scenario, what would I be looking to do? Well, there's nothing really, pardon me, there's nothing really available until we reach this level here anyway. And then in terms of bearish levels that price could reverse from, or sorry, bullish levels that price could reverse from, we'd be looking at these levels here. So when we run into this, as we are bearish right now, and this is a bullish level, I would expect this to give some form of reaction to then look to trade further down into these levels. So let's just fast forward price on here. So you can see there, we get that rejection. I'd expect to push up possibly into here. Now what I can also see is that we've got this body level here, like so, that we may actually want to tap from the other side, because you look here, we've tapped it. If I just look all the way back, we've not tapped it from the underside yet. We haven't taken any bearish trades off of this. They've only been bullish to the upside. And as you can see, price taps up into there, off of this continuation level, and then we continue going down. And where should our target be? It should be this down here. Okay, just a little bit more of a push up. And as you can see then, okay, we actually end up reacting off of this. So this is a bullish continuation. However, we were bearish, we tapped it from the bearish side, so we can look for this to continue us down here. And as you can see, we end up eventually tapping into this. Now we've closed through this level, so I'd expect us to carry on down to this level minimum. And then you can see us rejecting from this, like so. So now that we've rejected from this, I'd expect price to end up going higher. And where would that price point be? Well, most likely this level here, which is a B level. So that is how I'm using 4 hour closes to trade. If you've got any questions on this, don't be afraid to ask them in the Discord. If you're not in the Discord, you can find the link to that in the description below. Thanks for watching, and then when you're ready, move on to the next YouTube video.